Yes, we can start.
Okay. See, what we have done yesterday, we have stopped here, na? We have done with
Yeah.
this. Is it right? No.
Yeah, yeah. No, no, this one is done, no?
Yeah, this one is over.
Oh, yeah, yeah.
Okay, this one is over. We have to take this. There are two things are there. This is separate and that is separate. Okay?
Okay.
Now, just have a look on it. Colson Company incurred losses during the year ended 30th June. They have done the impairment was performed. Carrying amount of the assets has been given, including value adjustments on acquisition, but excluding goodwill. They are given you the carrying amount. These are all carrying amounts, okay? These are all carrying amounts. The recoverable amount, assets were estimated how much? 100. Included in this assessment was building owned by Collison, which has been damaged in the storm and needs to be repaired by how much? 4 million. Other land and buildings are held at recoverable amount. What are the other land and buildings? Fine. Assalamu alaikum, Imran sir.
वालेकुम अस्सलाम सर सॉरी मैं थोड़ा
No,
लेट
no,
हो
no,
गया
don't,
ऑफिस
don't say, please, don't say that. Don't.
में जस्ट
Don't say.
राइट
I understand fully. Please, don't say that. Okay, I understand. I
गो
understand everyone. Okay? They say that land and buildings has been included in the assessment was a building owned by Colson, which has been damaged in a storm and needs to be repaired by 4 million. Other land and buildings are held at recoverable amount. None of the assets of Colson, including goodwill, have been impaired previously. Colson does not have a policy of revaluing their assets. See, when we do this, okay, little bit careful. When we are doing this, we have to make a comparison. Okay, this is very, very sensitive issue. Very, very. You have the carrying amount, is it? You have the carrying amount and you have the recoverable amount. Okay, you have the carrying amount and you have the recoverable. They say that where they have said the recoverable amount is how much? 100 million. Okay, how much is the total of this? 60, 15, 9, current assets at recoverable amount. Is it right? 22 million. 22 million and total is how much? 106. 106. Land and buildings, okay? Now tell me how much is the carrying amount?
Carrying amount land and building 60 million.
60, okay? 60 minus 4. Is it okay?
Yeah.
60 minus 4. How much? 56 million. Why we are minus 4?
Damage.
Damage. Plant and machinery, how much?
15.
Plant and machinery, how much?
15 million.
No, we cannot take like that. How we have to take it?
Plant and machinery.
Plant and machinery. Any idea? Intangible assets other than goodwill.
Excluding
This is
goodwill.
15. This is 9. This is current assets. Okay, good. How much is the goodwill? How much is the goodwill? Goodwill not mentioned here. Okay. Current assets are how much? Current assets are 22 million. Is it? Current assets are how much? 22 million. Now, total is how much? 106. Are you clear about this? Now, what should we do? Any idea? What we have discussed and what we have done have to be very, very clearly indicators and objectives. Okay, objectives and indicators. When we are doing this exercise, how the impairment will work? Tell me. Any idea about this? See the things. You have land and buildings. Is it there? How much land and buildings is there? 60 amount. 60 million. There you can put this as a draft. Okay, as a draft. Next, how much is the plant and machinery? Plant and machinery is going to be 15. Okay. Next, intangible assets are how much? Intangible assets are 9 million. Okay, 9 million. Now, current assets are how much? Current assets are 22 million. Okay. Now, total is how much? Check again total. 60 plus 15 plus 9 plus 22. $106. Any idea about this? See what is happening here. Land and buildings. Land and buildings almost they say that it is going to be decreased by how much? 4. Okay. Land and buildings will needs to be impaired by how much? 4 million. Next. Anything else? When there is a impairment, okay, whenever there is a impairment, the value of the assets will decrease. Okay, how much they say, how much they are going to say that what is the recoverable amount? Recoverable amount is going to be how much? Recoverable amount is going to be 100. The difference between recoverable amount and the draft. Okay, this is the carrying amount. Is it right? This is the carrying amount. Okay, carrying amount is 106. Recoverable amount is how much? 100. How much is the difference? 6 million. Okay, 6 million. 6 million is going to be identified as what? It is a impairment loss. Are you clear about this? Okay. Now, see the thing. The rule says that very clearly. Goodwill has to be written off. Okay. Goodwill has been impaired previously. If anything is there. 2, 3 things are very, very clear. The first one, anything happens, first target is goodwill has to be reduced. See, your market share, goodwill has to be reduced to nil value. Is it? Goodwill has to be reduced to nil value. If exists 0, you have to target goodwill. because impairment is nothing but the value of the business is going down. Okay, first we have to calculate the goodwill. The second is what we have to do, the current assets. Is that the current assets will remain same, will remain same value. Okay, will remain in the same value. If it is, because why it is remains in the same value, think over it. Cash will be remains cash. If you are have time value of money, that's a different thing, but cash means cash, that's all. We are not going to, it will never the value of the increase and it will not decrease. Okay, next, whatever the 3 points, very important, whatever the difference remaining, is it right, difference remaining, it has to be relocate, okay, among other elements in a pro rata basis. Is that in a pro rata basis? We don't have goodwill here, not they have given. Is that this is nothing but impairment loss. The second column is going to be impairment loss, whereas the third column is going to be the recoverable amount. Okay, the first, now go by first. How much is there? You don't have goodwill. They say the land and building. If there is something is there in the content, they will mention very clearly that it is a land, is the value has been decreased. Now how much you are going to recover land? We are recovering land how much? 56. The current assets will always, they will never be excluding inventory. Okay, I want to make it sure. Is that excluding inventory? Means in terms of receivables, in terms of cash, basically these two things. Okay, excluding receivables. Other things will be remain same. How much is there? It is 22 million. Is that how much is there? 22 million. Now how much you have deducted? See the thing. Total impairment loss. Is that total impairment loss? How much is there? 6 million. Is it? Now minus land and buildings. Okay, land and buildings impaired. How much? 4 million. Okay, 4 million. How much is balance left over? Balance to be allocated. How much? 2 million. How you will allocate this 2 million among the plant and machinery and intangible assets? Any idea? Just now I told you, point number 3. It has to be allocated based on the pro rata basis. Okay, pro rata basis. When you take the pro rata basis, take the things. How much is that? These two are remaining. That's all. 15 and 9. If you add 15 and 9, how much it will come? 24. Is it 24? Now, when you are doing this, listen carefully. 2 million is the net impairment loss. Is it 2 million is the net? How you are going to allocate this 2 million? We are allocating proportionately among the remaining assets. Is it? Allocating proportionately. I will write this. Allocating proportionately among the remaining assets. Based on pro rata basis. Now 2 million has to be allocated. We cannot deduct 2 million from 1. proportionally the value will decrease. Is it right? Share of plant and machinery. Is it share of plant and machinery? I am writing this for your understanding. You are better have the knowledge, but just for to make sure. Okay, share of what will be the value of plant and machinery over total value. Okay, total value is here how much? 24 times net impairment loss. Total value is how much? Total value here is 20. Okay, I am very much worried about this. Okay, where is that total value? Total value is going to be 24. What is the value of plant and machinery? 15. Okay, total value is going to be how much? 24. Impairment loss is going to be how much? 2 million. How much you will get?
One point.
1 point.
4. Okay.
How much?
Let me check.
1.25. Check.
25. Yes.
Okay, 1.25. This is what, see, now 1.25. Plant and machinery will decrease by how much? 1.25. Okay, plant and machinery. Means what is the recoverable amount? 13.75. Are you clear about this? If there is a loss on impairment, we should not attach that loss to only one type of asset. We have to distribute that loss among the available options. Okay. First, what is the rule? First, you have to hit. I can put like this. You have to recover from the goodwill. The second thing, you have to make sure that current assets value will remain same. This is the condition. This is the blanket rule. Current assets value will remain same. Whatever the balance, that has to be distributed. Here we are having only 2 assets. In some cases you will have 5 assets. In some cases you have 10 assets. You have to distribute among all the assets proportionately based on the weight. Okay, based on the weight. This is with respect to what? This is with respect to okay, this is with respect to what? This is with respect to plant and machinery.
Good evening.
Hello, good evening, Sanjay sir. How are you?
Good, sir.
Sorry, we have started a little bit early. Not early.
No, that's good.
Okay.
Fine, because I got stuck in the traffic, and I know that I can't attend before 8. So that's why I said just carry on.
Okay, no problem. Okay, plant and machinery. How much? I will explain you again. Okay. Now, how much is the intangible assets? Intangible assets. Okay, intangible assets. Share of. Okay, share of impairment loss. Is it share of impairment loss allocated to plant and machinery? Share of impairment loss allocated to intangible asset. How much is intangible asset? 9. Total value of this is 24. How much is the impairment loss? 2. It comes to how much? 0.75 million. Are you clear about this? Is it okay about
Yes.
this? Okay.
Yes.
Now, Proportionately, what will happen? Proportionately, you have to decrease 0.75. It comes to how much? 8.25. It comes to how much? 8.25. If you take 4, it comes to 6. I will again explain little bit new thing. Okay, if you have no, if you whoever has not done before. Okay, 8.25 and 22 million. It comes to how much? 100. See the things. People who joined just latest, and people who have covering from the beginning. For both, it is advantage. You can understand the way it has been done. Coalition incurred losses during the year 30th June. They have an impairment removal performed. The carrying amount the assets is 30th June is how much? The carrying amount is 106. Okay, the carrying amount is how much? 106. Fine. On acquisition, they gave you the bifurcation also. The recoverable amount coalition assets were estimated to be how much recoverable amount? 100 million. Is it? We have written here. How much is the recoverable amount? Recoverable amount is 100 million. They say that where with respect to the coalition, net asset of coalition here as follows. Okay. How much is the net assets? It is going to be recoverable amount. It find to how much? It is going to be 100 million. Are you clear about this? The difference is going to be how much? 6 million. This is going to be called as impairment loss. Now how we have to allocate the impairment loss among the different assets as such is that first you have to make sure that goodwill will, if there is a goodwill will become 0 straight away. There is no plus, there is no minus. Okay. Now they have mentioned in the last paragraph, first, second and third paragraph, second paragraph, not third, second paragraph, that coalition company which has been damaged in a storm and needs to be impaired by how much? 4 million. We have deducted 4 million loss. It comes to recoverable amount is 56. Likewise we have done, and whatever is left over in the draft, we have taken into consideration each and every one, excluding children. We have excluded the pensioners. Is that we have 1 minute? No, sorry. Is it what we have done? The remaining amount of 2 million. Okay, the remaining amount of 2 million is allocated among the remaining assets of plant and machinery and intangible assets based on what? Based on the pro rata basis. Is it based on the pro rata basis? 1.25 million for the plant and machinery and 0.75 million for the intangible assets excluding goodwill. Is it clear to you?
Yes.
Fine. Is it?
Yeah, fine. But
This
Yeah,
is
fine.
this is the process of allocating the impairment loss as per IAS 36 with respect to the A entity.
okay.
Now,
Now, regarding the recoverable amount, which is representing the beginning balance of starting from July 1st.
no, that we will that will not be reflected. We are not talking about when they will recover, when they will not recover. That is not in our condition. We are only what are we are responsible. We have to understand what is the impairment loss. We have to understand how the process of recovery of the loss, how it is to be allocated. That is our responsibility. Okay, that is our task of understanding. Okay, that is our task of understanding the recoverable amount and the carrying amount. Beyond that, we will not do
Okay.
anything.
Okay.
Okay. Next. Read very slowly. I am just minimizing it. If it is difficult for you to read, just let me know. Okay. It is little bit. If it is difficult, let me know. Fine. I want to make sure that the entire the entire case has to be on the one vision as such. Yeah, it is there now. Just take a second, take a few minutes and read this one. Slowly, take your time. Once it is over, please let me know. Is it clear? Once it is over, please let me know. Any clue? In one sentence, after you take your time.
No, I don't. I don't think it is required impairment, right? Or wrong?
No, you have to tell whether yes or no. Whether director decision is yes or no. Understand, listen, argue. I will give space for you to make discussions. Anyone say yes? Anybody who says yes, who say no?
I think no, because they ignored that many companies impaired the carrying amount of their ships. The price to book ratio is not uh, uh, calculated very well.
Good.
So because of this, the 0.3, it might be an overestimated for them because they did not impair the carrying amount.
For me, it's also no.
Any other specific point?
No, because also they did not take a proper valuer who can do the valuation of their assets correctly. So that also uh, one of the factor. Plus, they didn't take the market situation, uh, market condition, what exactly working in the market, and they see that there are certain competitor companies has losses or they have already done the impairment. So they should have taken the decision to do the impairment. So it's from me also it's no.
Sanjana,
Yes, yes.
anybody else? Actually, see the thing point by point. Is that all calculated by dividing the market price carrying amount, net assets was 0. The directors were happy, okay. Okay, the ratio is similar to other companies. It is similar to other companies. This is technically, it is not directly related. There have been no losses for the disposal of surplus ships in 2008, which were material in respect of the 2008 year-end fine. Means there are no losses from the disposable of surplus ships. Fine. There are only been estimated 2% drop in the market value. The directors has not engaged a qualified valuer. You estimate the market value of the fleet. Okay, see whenever we are in doubt, we have the right to take the to have a qualifier valuer. Okay, to have a qualifier. They have not engaged. Is that means these are not best estimates, not the best estimates. They are not based upon the market transaction. The cost of fuel has fallen. There was increase in demand for cruising after significant reduction due to recession. Fine. This is a market indicator. You can put it as a qualitative characteristics also. Bohai has started negotiation with creditors to defer payments. Is it a good sign or not?
Yeah, it's a good sign.
Yes,
I think
it's
why?
It is not a positive,
good sign.
Good sign.
is it? It is not a positive sign. Okay. Now, fine. If you take into consideration, if you take the percentage aspect, how many? This is not the first and second not there. This is not the best estimate. This is not a financial indicator. This is a market indicator. Where we are talking about the payments, payment doesn't have a positive sign. Okay. They started negotiating with the creditors to defer payments. Okay, to defer payments. Whom they are paying, they are asking. See, when you are requesting some people that we will postpone the payment, may definitely financial, is it? Bohai ignored the fact that several companies have written down the carrying amount of the ship during 2008. This write-up was a result of many ships, including Bohai ships, lying idle as a result of overcapacity. for this? Please tell me. Point number 6.
I think point 6 is reflected with the point number 1, the same.
Okay. Okay. It is just they are giving you about the brief. There is no qualitative, no quantitative. Okay. No qualitative, no quantitative. Next. What is the point number 7? See that even though losses from the total sale of ships are not material in the financial statements, but there are several cases where the loss relating to disposal of ship was 40% of the carrying amount of the ship. Is that what will happen? They are saying that technically there are no losses in material terms, but there are instances, several cases. Loss relating to disposal was 40% of the, means they are getting how much loss? They are getting around 60% on the ships, which has been done in the past. Okay, which has been done in the past. If you take this into consideration, what will happen? What will happen? See the things. Again, I'm asking you. Again, I'm asking you. You have IFRS 13 fair value. Level 1, level 2, level 3. Now you see the thing, what we have done in day 1 and day 2. We are going to cover all those things at the subsequent levels. Okay. Now, if we talk about the level 1, again for your understanding, I'm just revising. If you are talking about the level 1, listed quoted prices. Is it listed good? If you are talking about the things, level 2, property, plant and equipment. If you are taking 3, it is the estimated values. Is it? Now there are several cases. This is the estimated, okay, where their loss relating to disposal was for. Means definitely, if you take into consideration, there is a clear indication that it is a impairment of the assets. Okay, we can put like this. What is the last one? The price of the cruise was not increased in 2 years. Conservative income estimate that has been applied in future budgets because of anticipated delay in the recovery of the cruise market. Again, what's happening here? It is the revenue is decreasing. If the revenue decreases, the assets will also decreases. Revenue decreasing means cash is decreasing, basically. Okay, cash or bank. If cash or bank is decreasing, it means what? The core, if the
Solvency problems.
pardon?
Solvency problems.
Solvency. We will not say solvency. Is it right? We will not say solvency. We will use the word impairment. The value of the assets are decreasing. Okay, the value of the assets are decreasing. See, if the revenue decreases, cash will decrease. If the cash is decreasing, assets are decreasing. Automatically, what will happen? Recoverable amount. Is it right? The concept is the recoverable amount is decreasing. Is it? The recoverable amount is decreasing. If the recoverable amount is decreasing, carrying amount increases. Is it? Carrying amount is increasing, recovery amount is decreasing. Based on these statements, we can say that the directors were incorrect. Is it? The directors you have to mention, okay? The directors are incorrect by not conducting an impairment test. Is it clear to you?
Yes.
Okay, very in depth. Okay, very in depth. The moment you are working on that, we will have a very clear aspect as such. Got my point? This is called as a impairment, where very substantially, very crispy. Within the time I mentioned you what is a broader framework of impairment: carrying amount, recoverable amount, value in use. Is it? If the carrying amount is more, recoverable amount or value in use, whichever is higher, we have to take that and compare with the carrying amount. The difference is a impairment loss. Is it clear to you?
Yes.
No.
Yes.
Is it? It will take time to charge you, okay? I can understand the things, okay? I can understand the things. A small aspect of provisions. See, nowadays, can I start this one? A small aspect of IS 37. See, the IS 37 is very, very critical. Very, you cannot imagine provisions. We are what we are doing? We are using all the estimates. See the thing. Contingent liabilities and contingent assets. See, as a matter of fact, as a finance CEO, as a chief financial officer, or a head of finance, increasing the profits or decreasing the profits is a click of button. You can do anything, keep it in mind. There is a click of button, estimate it. And what happens when you are doing the things? All the time we will say that these are the assumptions. The entire thing, see that this is what the assumption, this is my judgment, okay, this is my judgment. Fine, you are doing on the particular situation, they have to take this when it has been opportunity there to take that decision. I have taken this decision with respect to the creating of provisions, okay, creating of provision. We will see what are the plus or minuses. Is it? And everywhere it is happening. Got my point? Everywhere it is there. The accounting, what is explain the accounting standard on provision is necessary. Distinguish between a legal and a constructive obligation. Legal obligation by law. Is it legal obligation by law? Is it right? It is you and the government that makes. Legal obligation is also as per the rules of the government. We have to follow it. Is it? Next, you have a legal obligation, you have a constructive obligation. Constructive obligation means the terms and conditions. Is that the terms and conditions? Extended warranty. I am giving an example. Extended warranty. We'll say that a constructive obligation, any outlets in KSA will be accepted. This is the constructive obligation. That is the reason. Invoice will give you a complete, if you want to understand accounting, you take the invoice and see how the process will work. It is the same process wherever it is. When provisions may or may not be made and demonstrate how they should be accounted. State when provisions may or may not, when you have to make provisions, when you should not make the provisions. Okay, when you have to make the provisions, when you should not, in which condition. How provisions are going to be measured. We will find strange. Any idea about contingent assets and contingent liabilities, please share. Anyone? Okay, guess. I am giving this option, guess. Any idea about these two?
These are the activities or something which are based on the outcome of the other activity.
Yes, these are the. I am going to use the same language, same understand. May or may not be.
Yes.
Is it may or may not be? See, it is very, very tough. The moment you are doing, see the thing, when you are making a provisions, okay, you are creating a provisions, directly what will happen? The profits will decrease. Is that profits will decrease? This much is there, and people will do. Very simple. People will do. People will do because of so many reasons. People will do. One of the reasons is they want to reduce the tax. Yeah, they want to reduce the tax. Even if you take the businesses, you take the individuals, you take any banks, you take the things. Is that they will make the provisions, and provision there is no restriction. There is no restriction. You put the provisions, you put your assumptions, and you give the reasons. Nobody will question you. Nobody will question you. That is the reason people will take the advantage of provisions. What are the things? They are saying how it is going to be there. We are talking about warranties. We are talking about guarantees. Now there is no guarantee. I don't think so. We will come across any guarantee on any product we will ever come across. Warranties only. What is the onerous contracts? Any idea? Onerous contracts. See, you have entered into a contract with other party, okay, with other party, and assume the amount of contract is going to be 10,000. Yeah, the amount of the whether you receive money or you don't receive money. Is that whether it's happening? You have to do that task. If you are talking in terms of payments also, whether you receive or don't receive, as per the agreement, you have to pay. Once you have made the commitment, you have to execute that commitment. That is nothing but onerous contracts. You have environmental decommissioning and similar provisions. We have done, if you take into consideration, in one, I don't know where we have covered, in some way chapter number 5 or 6. Is that what happens when you are starting a project, okay, starting a new project, what you will do, you will take some space and you will put all the things there. Is that all the nearby, just besides, if there is a provisional space is there, automatic. Now what will happen, we have to create a provision. We have to create a provision if the project is going to be 5 years, and after 5 years we have to make a cleanup cost. Is that we have to make a cleanup cost. What we have to estimate that cost, and you have to add that cost to the project. Add that cost to the project. Is that environmental issues, decommissioning and similar provisions. And the last but not the least is restructuring. Restructuring is a broader term. Okay, restructuring is a broader term. You are restructuring the organization, you are restructuring the markets, is that you are restructuring the finance. Okay, I will write this. Is that for see you are restructuring the finance. Is that you are restructuring the markets. Okay, you are everywhere restructuring. There will be
Restructuring a contract.
pardon.
Restructuring a contract.
You can put like this also. You are restructuring the contract also. Is that you are restructuring the contract, extending number of years, reducing number of years, making a modifications for everything. For everything. What we are going to say? We are going to say that there should be a provision. Is it? And these provisions should have a reliable estimated provision. Is that we cannot see if you overestimate provision, what will happen? The profits will decrease. If you are overestimating the provisions, the liability will increase. Simultaneously, the assets will also be increased. We are overstating the assets and liabilities and understating the profits. Is that? I will write here provisions. Is that if you are making a higher provisions? Is that what happening? You are underestimating the profits, and we are overestimating valuation also we can say. Is a valuation also we can say in terms of what? In terms of assets. Okay, this is the first thing. Next, what they are talking about, we will talk about the distinction between an adjusting and a non-adjusting event. Any idea about this? Any idea about adjusting and non-adjusting event?
Events that happen after the reporting date.
Events happen after the reporting date. After the sign, see, you will have preparation, you have submission, you have review, and after that you will have the auditor signature, and after that you have the final version. Is it right? Now we have to know whether it is going to be adjusted or it is not going to be adjusted. If conditions are very clear, if it happens before, is that if it happens before reporting date, is that if it happens before the reporting date, is that before reporting date, Okay, after auditor signature. Is it after auditor signature? Is it right? On that basis, we can say that if it is happening before the reporting date, but after the audit signature, then we have to mention very clearly. Before the reporting date, any event happens before 31st December. Is that they will mention that there is a loss of fire is there, there is a damage is there, there will be losses in the stock markets are there, anything they will mention, okay, specifically. Then we should make sure that if it is happened even before 31st December, that has to be adjusted. If it happens after 31st December reporting date, we should not adjust, but we have to disclose. But we have to disclose in notes to the accounts. Okay, little bit dry. Okay, little bit dry. Okay, little bit dry. That's all I can say, not more than that. Okay, identify items requiring what we need separate disclosure, including the accounting treatment and what are the required disclosures. Whether we need a separate disclosure means a separate report we have to submit. If that, depending on the events, we are going to segregate it and we are going to present it in that way. Fine. See the thing. Just read this one. It says that, okay, it says that appropriate recognition criteria. Rules have to be very clear why we are making provisions. Measurement bases are applied to provisions, contingent liabilities and assets. Contingent assets. Contingent liabilities. Can you give me example of this? Can you give example of this? Or contingent assets, anywhere.
You just told about like product warranties, right?
Yes. Anything is there?
A legal case of a significant amount.
Very important. Legal.
Kind of a pending lawsuit, right?
Yes. Legal cases you cannot imagine. Okay, you cannot imagine. You will have a legal cases. Yes, tell me, sir.
Or we can take it like a long outstanding debts, or you can say like a bad debts or something.
What is the rule of the bad debts to be retained in the financial statements? For how many years? Good question. For how many years you are doing that? We have to, in terms of bad debts.
2 years.
Pardon?
2 years. 2 years.
No, I think it's more than 3 years, 3 to 5 years, I guess.
Technically speaking, it is going to be 7 years. But because of banks, okay, banks are very sensitive. But It is at the discretion of the management, okay? And management doesn't want to keep any bad debts for more than 2 years. 2 to 3 years. Somebody said 2 to 3 years maximum. In some cases, they will keep it but for 5 years also. But it gives you a negative signal. It gives you a negative message to the stakeholders that people are creating so much provisions. Because if provisions increases, is that if provisions are increasing, what will happen? The credit rating will decrease. If provisions are increasing, if provisions are decreasing, the credit rating will increase. We see legal cases. Is it? You see some cases in some situations. Is it right? You will get a fine of around $10 million. Then how you have to work it out? Okay, how you have to work it out? You'll have legal cases, bad debts, anything, product warranties. Okay, appropriate recognition criteria measurement are applied to provisions, contingent liabilities, content. Sufficient information is disclosed in the notes to the financial statements. Disclosure, see, don't think that if we don't disclose it, it will, whatever the financial factors, whatever the financial information which we are going to be addressed while preparing the financial statements, keep it in mind, those has to be disclosed. Is it? Those has, because on that basis it will enable the users to take the decisions. It will enable that users to. A provision is a liability, all we know, is it right, of uncertain timing or amount. A liability is the same thing which we have covered. What is the definition of a liability? Is an obligation arising from the past event going to be settled in the future. The settlement is expected to result in the outflow from the entity of resources and economic benefits. Wherever it's possible, okay, these are the things which make the difference of understanding the concept. They are giving you different definitions, different ways. Okay, how present obligation as a result of past event, you should have a reliable estimate for the amount of obligation and the probable that the outflow of resources for economic benefits will be required to settle the obligation. The outflow of resources. Is that the outflow of probable? Everywhere they use the word probable, and I told you in the beginning, probable is one word where people will criticize IFRS. You are giving an option, is that you are giving the option to the management or the people who are preparing the financial statement that you can make an assessment. Automatically what will happen, that is the weak point. That is the weak point of, if you ask me, this is one of the weak point of financial statements. If we are saying that there is no present obligation, if you are not going to have a reliable estimate and there is no probable outflow of resources, if these conditions are not met, no provision shall be recognized. We cannot say that these are the things we can create a provision. No, there should be a present obligation, legal or constructive. There should be a reliable estimate of the amount of the obligation, and most of the cases it is very much visible, okay, that if there is somebody has done something or if a company has violated the rules, is that they'll say that, okay, because it is coming in this rule, you have to pay 50,000. Okay, automatically you have to, that makes the things to be more, you have to judge it more specifically. Is that if these conditions are not met, you cannot create a provision. What are the conditions? I will put it in green. Is that a present obligation as a result of past event? You should have a reliable estimate of the obligation. There should be a probable outflow of resources to settle the obligation. Is that to settle the obligation? That is the reason that's what happening in the courts. Okay, in the courts, most of every company, as a matter of fact, every company will have some issues which are going to be settled in the court. The present obligation of the obligation needs to exist because, see the thing, more careful, the events which have already occurred at the year end, and give rise to the potential outflow of economic resources. The obligation needs to exist because of the events which has already occurred at the year end, okay, at the year end, and give rise to the potential outflow of economic. That is the reason, if you take that into consideration, we are using a concept called as accrual concept. It gives rise to a potential outflow of economic resources. There will be a legal, there will be a constructive obligation. What is the constructive obligation? A company establish a valid expectation course of a practice regardless whether there is a legal obligation to perform or not. Constructive obligation in writing. Constructive, see what happening, this is the point where people will really come across the most difficult phases of their estimations. Okay, if it is a constructive obligation, is it right? It means I will pay. Is it? I will pay. That what it says. That is the reason. When we are doing this, what will happen? At the end of the say, there is a terms and conditions. The moment you say I accept, it is a constructive obligation. Now, why we are creating provision? That's very important. Is that why we are creating? See the thing. A simple concept. You are talking about the receivables. Is that you are talking about the receivables? You are talking in terms of receivables. When you are talking about the receivables, what will happen? We are creating a provision for losses. A intention to make payment is not enough on its own to justify provision. Is that a intention? We are not saying that intention. Intention is not there. The concept is there should be an obligation to make a payment. This is one area the finance managers, I'm telling you, the top, if any finance, I'm not talking about it, if they want to reduce the profits, increase the provisions. Is that they want to reduce the profits, increase the provision. Automatically it will have impact on the profit and loss account, and it will have impact on the statement of financial position.
Example would be the provision of obsolete items or slow moving items of the inventory.
100%. Anything you talk, if you take inventory, okay, inventory, they will say that yes, there is a provision that there is 50%, 50% of inventory become obsolescence. Is it? There is automatically what will happen? It is not only impacting the balance sheet, the current assets, but also it is impacting the profit and loss account. Very, very easy. These are the things you have. If you are working, I will say this. If you are working or if you have the interaction with the auditors, whenever you have the interaction with the auditors, see the way they are focusing. They will focus on only few areas, gray areas. On those gray areas, they will catch the pulse of the client. People will make the provision. There should not be an intention, but there should an obligation to make a payment. This is important. Accounting. This is important for repairs and refurbishments known to be required in future. See the thing. That's it. Somewhere down the line happen. We are in 2024. Somewhere down the line will happen in 2025, 2026, and 2027. We should not create a provision now. The only thing what we are doing, we are working with the concept of making a provision with respect to decommissioning. Is that when you are decommissioning, whatever you are creating a provision for the cleaning up cost. Can you tell me about this? We will complete this and we will take a break. If the property lease includes requirement that the premises are repainted every 5 years and the future cost is estimated 100, the lessor is the person who owns and who uses. If a property lease includes requirement premises repainted every 5 years, the lessee would probably prefer to spread this cost over 5 years. Is that you are spreading first year, second year, third year, fourth year, and fifth. In this way, there will be a provision of 100,000 in 5 years' time, and profits are equally affected each year. to do?
There will be an entry of $20,000 for each year, repair maintenance or paint expense debit, and
Okay.
provision for repair maintenance credit.
Okay, fine. That is you are talking about individually for years. If they say that second paragraph, see the second paragraph. In this way, there will be a provision of 100 in 5 years' time, and profits has been equally affected each year. What is the debit and what is the credit?
The debit would be the expense SPL, and credit would be the SPF.
Credit will be the
The statement of balance sheet.
It will be in the liability in the balance sheet.
Liability side.
next.
The debit will affect the income statement.
Can we do 1,000 at how much amount is there? That I'm interested in the amount only. I'm interested in the amount, debits and credits.
The amount will be 20,000.
The amount
Per year, that will be.
Huh?
Per year, 20,000.
Okay, I agree with you. What is the general entry? Initially, what we have to do? Is it
Debit expense.
Initially, what we have to do? What we have to do subsequently?
Yeah.
Credit, what will do? The credit will give provisions. Are you okay about this?
Yes.
Yeah, that is correct.
Debit?
Debit would be expense account.
Which expense account? I agree, okay. Debit will be expense. Which expense account?
Repair and maintenance, something like.
Prepaid. Understand? Prepaid expenses. Is it right? One side your asset is increasing, the another side your liability will also increases. Prepaid expenses account. Whenever there is at the end of each day, at the end of each year, what will happen? You will put expenses. Is that you take the provisions on the debit side, provisions will be decreased. Is that provisions means profit and loss account only, okay? Provisions means if you are debiting provisions means you are reducing the provisions by way of repairs, whatever the charges, okay? Whatever the charges, we have to assume that, and automatically prepaid expenses will get credited.
Okay, so here you are saying like we will pass one entry for 5 years and taking into consideration the all estimated cost for the bills. So that way we will debit first year the initially 20,000 and then the 80,000 we'll put it under prepaid expenses. So that will go to us.
Yes.
And then the total provision of it will go to 100,000 to that particular provision.
Yes.
So in the first year itself, I will take the future cost.
100, is it right? Here it has not been specifiedly, not that much specified clearly that at the whether they have paid in advance or paid what is their paid in arrears, okay? Paid in advance or paid in arrears. Is it subsequently they will also tell that it is paid in advance or paid in arrears. According to that, we have to restructure our answer.
Okay.
Restructure our decision. Okay.
Okay.
It's not
Understand. Because I thought like it's of every year, what will be the entry? That's what we were talking about, only 20,000.
No, every year you put a provision of 20,000. Is that right down? Whatever the things are there, provision is only a namesake, but you have to write detail about what is the reason, and whatever the prepaid expenses will be there, you deduct those prepaid expenses from that current asset account.
Okay, understand.
Okay.